Doug Limerick, ABC News.
WTBQ weather.
Look for mostly sunny skies and quite cold today, high only around 20 or so. Then tonight, partly cloudy, heading down to 8 to 12. Tomorrow, look for partly sunny skies with a high in the upper 20s. Clouding up tomorrow night with a low in the low teens. And Saturday, snow likely. It'll continue through the day. This could be a significant snow event depending on the exact track of a coastal storm. It should taper off with some light freezing drizzle on Sunday. Temperatures will stay in the 20s. This is meteorologist Tony Salimo from the WTBQ Weather Center.
WTBQ.
Good morning. This is Janine Panarelli.
Good morning. This is Michael Gianetto. Welcome to the Home and Mortgage Show.
That's right. Happy Thursday, everyone. We're going to be talking about your credit today and how it affects you, what makes up your credit, and what you need to know.
Absolutely, and just to cover, what we want to tackle in our show is discussing the home buying and the mortgage process as you go through it, and how we can help to assist people and give them the information and educate them on what they need to hear and know throughout that process.
That's right. There's a lot of information out there, so you can be looking on the internet, you can be talking to Cousin Joey at the barbecue, and there's too much information out there. So we really need to make it where you understand that this is what you should be doing, what you should be doing, what you shouldn't be doing. And starting off with your credit, because you can't buy a home if you don't have good credit, right, Mike?
Absolutely. Your credit influences any kind of terms and things that are available to you, whether you're getting a car, a home, credit cards, things of that nature. So It's a big influence.
So tell me, what's the highest credit score you could have?
Well, there is a range of credit scores for each bureau, and the FICO actually lays out a range of scores from 300 to 850.
300?
Correct, 300.
I thought 500
the
was
lowest
bad.
I've ever seen. Lowest I've seen, 385 was the lowest credit score I've ever seen.
I haven't checked mine in a while. I better check 300. Oh my gosh.
Yeah, 385 was the best.
Okay, and the highest is what?
850. Based on FICO. However, the credit bureaus that people are familiar with, being TransUnion, Experian, Equifax, they have their own type of overlays for their logarithms that we mentioned earlier today.
Right.
And so the scores from their logarithms will differ, from the FICO model.
Okay, that's foreign to me. Logarithms. You want me to?
How they calculate? It's a formula. How they calculate the FICO scores.
Okay. So now you have this 850 credit score. So people who have that, that top notch, the ultimate credit score, they know they have good credit.
Absolutely.
Okay.
Most people know that they have good credit.
Yeah.
There are some things that sneak up sometimes.
Okay.
You'll have a conversation and all of a sudden, you say, well, you have this collection or this account that's derogatory for $95, and all of a sudden
peanuts,
it's like it's peanuts, but they panic. Oh my God, what's going on? You know, and so they want to know exactly what it is. They take care of it almost immediately.
Yeah.
So those people that have that good credit, they know.
They brag about it.
Absolutely. They know.
They're like,
they know what the influence
awesome
is going to be for their, whatever they're applying for.
And the people who sometimes they call me, they call you. So it's like, what do they do first? Who do they call first?
That's the
they
chicken
or
the egg.
House, chicken or the egg.
We know you're the chicken. Don't you have chickens?
No, I want chickens, but I can't have them in the village of Florida. But I want chickens.
The municipality?
Yeah, I can't have chickens.
Oh my goodness!
But
I want them.
Yeah, so I'm usually running around like chicken without a head. So I'll be the chicken. So what comes first, chicken or the egg? And obviously, if you've seen Mike on our Facebook page, you'd know why we're going to call him the egg.
Yeah, very nice. I knew that was coming.
Well, it's so true. But all right. So they call me. And I'm going to, the first question I ask them, is, first of all, are you working with another realtor, and have you been pre-approved for a mortgage?
So what happens, based on their response?
Well, a lot of times they tell me, no, well, I'm just looking, I'm just starting. And I tell them, okay, well then, what, you're calling me on a particular house. This is a $300,000 house. How do you know you can afford this home? And then I refer them to you. I said, well,
which is great. I love that.
Yeah, there you go. So
I think there's two types of and I think we've discussed this before.
Yep.
There's two types of buyers that are out there, and the first one is an impulsive buyer that they wake up and they say, "Oh, I want to buy a house," and they go searching on the internet. Right?
Yep.
Most people are searching on the
Right,
internet
or-
first these
right,
days.
that they're with the family on Thanksgiving or Christmas, and this one's, oh, have you seen this, house on the internet?
Right. Oh, the neighbor's house is for sale, and
Yep. So they don't know. They're curious, and then they
Absolutely,
call
and
me.
And then there's the planner, right?
Yeah. Mm-hmm.
But you'll have, I think the impulsive buyer is going to call you before that planner. So that impulsive buyer they're going to search, they're going to see something, they're going to see your picture online somewhere, right? And they're going to
Yep.
pick up the phone and say, "Hey, I want to see this house."
That's right.
Right.
And then I'm going to say, well, will you be paying cash or will you be taking a mortgage? And then their answer is always
What's
like,
the reason though that you want them to get pre-approved?
well, when we're showing houses, it's really important that these buyers qualify. The sellers are expecting a buyer's agent to come into their home with a well-qualified buyer. They're taking their dogs out. They're getting ready for a showing. They're staging their homes. They're cleaning and, telling their kids, you got to make your bed. We have a showing today. And, if we're coming with somebody who's not qualified to buy a mortgage, you're wasting everybody's time. So that, that's not a good thing to do.
Absolutely.
So we like you to be pre-approved, right?
But
Is
what
there
about
a
those
difference
people
between pre-qualification and pre-approval?
That's a great question. There definitely is. A pre-qualification, the definition of it is just somebody that basically calls up and gives their information and says, here's what I have, how much can I afford? And then whoever they're speaking with may put it on paper and say they're pre-qualified for X. I think in the recent years that it's been interchangeable with the pre-approval letter, but a pre-approval is when you've run credit.
Right.
You may
That's
or may
what
not,
I'm looking for.
Absolutely,
Right.
and there should not be a letter out there that's not an actual pre-approval after seeing somebody's credit, knowing what their credit
I've seen a
scores
few.
are.
I've seen a few people go on the internet and they answer a few questions and then they print out, oh, look, I got this pre-approval from, ABC Mortgage Company on, the
Iowa.
internet. I'm like, oh, where'd you get this from,
That's a good thing to bring up because there's a lot of companies out there, internet companies.
Yeah,
and
you
they
gotta
do
be careful.
not know how to do business in New York or New Jersey, and it's very different all over the country.
I always recommend to my buyers, look, work with somebody local. They know the area. They know the local realtors. We all work well together.
Absolutely.
Yeah. So now, all right, so they're pulling their credit. We know what the minimum and maximum credit scores are. You pull from all three bureaus? How do you pull? So you get...
Correct. You'll pull a tri-merge, they call it.
Okay.
And it's a residential mortgage credit report. And what they'll do is they'll give all the information. We'll take a full application on them, which we'll go in future shows. That we'll talk about the application process.
Okay.
All right.
We have a call.
Yes, hi.
Hi. Good morning. How are you?
Good morning.
Good morning. I had a question for you, and it pertains to those pre-approved mortgage letters and things. Shouldn't that include taxes as well? Because taxes vary from place to place, and aren't there other variables, too, that are impacted as well?
Absolutely. A pre-approval, when you're sending that out, it has to be based on what the current income is, what the taxes are on a property, what their estimated mortgage payment is going to be for principal and interest, the homeowner's insurance, an estimated payment. You could have mortgage insurance. Not
You could have an HOA.
hazard insurance, right? You could have a monthly maintenance or HOA, and then all of your monthly debt payments and obligations, credit cards, installment loans, vehicles, things of that nature. That should all be into the equation and the formula when somebody is getting pre-approved.
Is that spelled out in these letters that they have today? How does that work? I mean, for example, let's say I'm shopping in Warwick for a house, and then I go to Middletown, and the taxes are drastically different. Is that spelled out where they say, up to, annual taxes of X or anything like that?
I think the first thing is who you're going to be dealing with and how far are they going to dig into the process.
Yeah.
So, and those are drastically different, obviously, Warwick to Middletown. So Warwick, right off the bat, somebody has to know there's an additional transfer tax that the buyer pays to purchase a house in Warwick. Right, and then in addition, the amount of the property taxes. And
is there a 1%? What is it? Somebody had told me that a while back. Is that like a 1% tax for Warwick, or what?
It's
how does that work?
It's 3/4 of 1%.
And that's just for Warwick, buying in Warwick,
Correct,
right?
correct. Because Warwick wanted to put this in place, and I think it was more to attract a different type of buyer.
Yeah, or keep others out. Now, you're a broker or are you a banker?
Actually, I'm a mortgage banker, licensed mortgage originator for a mortgage banker.
Okay, so you do work for a mortgage bank as opposed
I
to
do.
a broker.
We're actually a broker as well because you can function as both.
Yeah.
So when there's products that kind of fall outside of the box, if you will, then there are other products that you can exercise.
Right. And let me ask you this question. This is becoming a huge issue, is where your mortgage resides. I mean, in terms of servicing rights. Do you guys service your own mortgages, or do you basically put them out in the market, and do they? I presume they all still get securitized, but what do you do with yours in terms of servicing rights?
Correct. So as a mortgage banker, most of them do not service unless they have a Ginnie Mae license. But most of them sell off within 30 to 45 days into the secondary markets, and then they pool their loans and do their thing. But you underwrite to the guidelines of Fannie, Freddie, HUD, and then you wind up selling them off.
Are HUDs more? Somebody told me that HUD mortgages are more common today than Fannie Mae or Freddie Macs, from what I understand.
Yeah, the percentages have definitely grown for the HUD and FHA financing. And Fannie and Freddie for a couple of years now has been trying to unravel, which is not too. Yeah, it's not too successful.
Are there? Obviously now, Fannie Mae and Freddie Mac are both quasi government organizations, or maybe they've just been totally taken over. But obviously, HUD. So HUD's doing more of it. What are the? Because I remember years ago, if you went for an FHA mortgage, they didn't have I guess this is really going back, they didn't have the mortgage amounts available for places like Warwick, and that's changed, I guess, right?
Correct. They use the median home prices to gauge those loan amounts and set them. So it has been changed, and actually today is a little higher than the Fannie and Freddie limits.
Is that right? And what are the minimum down payments on stuff like that?
On FHA is 3.5% down.
It is 3.5%.
Correct.
I guess I didn't learn anything.
I'm sorry, what was your name?
It's Joe.
Joe. Joe, we would love for you to continue to call into the show, and we just want to get to a few other things if we can, and feel free to contact us as well.
All right, very good. Thanks.
All right, thank you.
Thanks for calling. Okay, so we have these three scores. Which one do you use?
We always use the middle of the three. Okay.
The middle. So when somebody says, "Oh, but I have a 700 credit score,"
correct. We don't know which one that is.
That could be like the top
number. That could be the high, right?
That could be the high, and they could have a 660
right.
in the middle. So you use the middle score.
Exactly.
All right. So what actually makes up your credit score? How do they get that number?
There's different criteria that goes into the equation. From actually, just to throw out a good resource is myfico.com, where people can pick up a lot of information on it. But there's different things that go into the score and the breakdown, and you can do it just some percentages. 35% of your credit score is based on payment history from existing accounts that you have. So as soon as you have a late payment on something, it could be devastating to the credit.
How late?
It has to be over 30 days late.
Okay, so if someone's, they were away on vacation, they forgot to pay a bill, they come back, it's a week later, and they're like, "Oh my God, I forgot to pay this bill," and they're freaking out. Is that going to affect their credit?
I think it depends on what type of account you're dealing with.
Okay.
If it's a credit card and they're late, a lot of these credit cards have default interest rates that you're a day late, and all of a sudden the interest rate goes up and your payment goes up. But as far as a late payment reporting to the credit bureaus, it has to be over 30 days.
30 days. So you can see on there. So when you pull a credit report, you can see if they're 30 days late, if they're 60 days late, if they're 90 days late.
Correct.
Right?
Correct.
Okay.
It'll break it down and tell you on each trade line, they call it, which is each account. It will break down if somebody is current, paid as agreed, they call it, or if they've had lates in the past or are currently late as well.
Okay. So you have student loans, you have credit cards, right? You have an old mortgage maybe, a car loan. What else could be on there? when people take a cell phone, for instance, they go to Verizon Wireless. I'm thinking anything that you're giving your social security number to, or you're making an account, would a cell phone bill be on there, for instance?
No, and it's ironic. It's not. If you default, and an account like that goes into collection, that will show up. But
That's
it doesn't show up. It is, and that doesn't show up as an account.
Especially with these cell phone bills, they're like $300 a month right now. It's a car payment. You would think it would be on your credit report, but it's not.
It's not. The same as utilities.
That's
Utilities are not on the credit report either.
Utilities are not on the credit report.
Correct.
That's really good to know.
Correct.
So now you're pulling credit on someone, you're looking over the report, and you're saying, okay, you're looking at, what if they don't have any credit?
No credit can be an issue. No credit can be an issue.
We have a lot of people who are renters.
They should have some sort of credit established. No matter, it could be anything. It could be a credit card or a store card.
What if they don't have one?
$300.
Okay, but what if they don't have one?
It can be a problem.
Why?
There are loan products that you can build what they call alternative credit.
Right.
And alternative credit can be the payment history for your auto insurance. It could be a payment history for a gym membership.
What about your rent?
Utilities.
What if you're a renter? Okay, so
rent is a big one.
You never bought a house before. You're a renter. You don't have any credit, but you've been paying your rent on time.
Absolutely, rent can be used toward that alternative credit, but it has to be supported with canceled checks. You can't have somebody walk in and say,
cash.
"Oh, I paid my rent on time. It's perfect."
Yeah,
there has to be some supporting documentation.
That doesn't work. So you would see it on a bank statement. You ask them for their bank statements.
Correct. You can see it on a bank statement. Sometimes you want to limit the information and some of the paperwork, so you'll ask for just the copy of the front and the back of the canceled check. Or the cleared check for the rent.
For how long? How far back do they have to go?
12 months.
12 months worth of rent. Oh.
Correct.
All right,
Correct.
that's good
And
to
that's
know.
not in every case. Sometimes you don't need it. Sometimes you don't need it.
If you don't have any credit, you don't need it?
Well, if they have no credit, yes, that's a good way to substantiate.
Okay, but if they have a car payment or a student loan or a credit card, it doesn't matter. If they're renting,
it may not matter. Correct.
Okay, that's good to know. So now, you pull their credit, everything looks great. You talk to them about what product they might, that they qualify for, whether conventional, FHA, Sony May, whatever they qualify for, and then you give them this pre-approval letter, and then they come back to me. I've seen on a pre-approval letter, not only does it say you qualify for a mortgage up to X, but I've also seen where you did, in response to the caller that called in, you put on there with a maximum of $10,000 in taxes. So that's good to know, because then as a realtor, we know what house to look for. They look at this house, look at that house in different towns, and I tell them, well, the taxes are a little higher in that town. You better call Mike again to see if you qualify to live in this town, this village, especially if there's a village, because now you have village tax, and people aren't aware that that's a separate tax.
I think in the discovery phase, if you will, when you're going through the application information and you're finding out where they want to look and have they found something that they've seen, and if they have, what's the taxes that they're looking at, and if they have a specific address, I actually pull it up on the county website, pull up what the taxes are, and you can actually look at actual taxes. So I'd rather be a little more accurate than estimated, but it does go on that pre-approval letter with the estimated taxes based on.
Not everybody does that, though. I've seen many pre-approval letters over the years. I don't, a lot of people don't do that, but it's good as a realtor to know.
Yeah, and you mentioned about the maximum that somebody can qualify for. The qualifying is not the most important, and in my opinion, you have to take a step back and see what's affordable for that client. Not just they can qualify for things, all day, but what's affordable? What's going to make them happy, feel comfortable, put money away, be able to put food on the table, deal with their kids and things of that nature.
All right, very good. All right, so we're going to take a quick break, and we'll be right back.
Our young men and women who risk their lives each day for your freedom have been forced to leave their beloved four-legged companions behind when they return home, companions who gave unconditional love and comfort to our soldiers. Some die, some are never found again. SAC, the Soldiers Animal Companions Fund, rescues these animals from war-torn Middle Eastern countries by bringing the dogs home with the soldiers. Help save the soldiers' hearts and the lives of their companions by visiting sacfund.org.
Listen for Almanac and your host, Paul Tesoro. Almanac is proudly brought to you by Central Hudson Gas and Electric Corporation. That's Almanac, Monday through Saturday mornings during the 9 o'clock hour. WTBQ.
This is attorney Bob Krahulik of the law firm Beatty & Krahulik, the lawyer guy on WTBQ Radio. Tune in every Thursday at 11:30 a.m. for the latest in legal advice and tips. We're taking calls and giving answers to all your legal questions and issues on WTBQ.
All right. Thank you for listening. You're on WTBQ with the Home and Mortgage Show. I'm Janine Panarelli from Panarelli Realty, and I'm here with Michael Gianetto from Residential Home Funding.
Welcome back. Thank you for listening.
And we're talking about credit and how important it is, because when you want to buy a house, you need to have good credit. We're talking about what makes up your credit and what we're looking for, what Mike is looking for. And this way, when he issues a pre-approval letter, I'm very happy. I see a pre-approval letter, I'm like, okay, this guy is good to go. So now, people don't realize it's like a whole pizza pie, and there's different parts that make up their credit. So not, paying your bills on time is just part of it.
Absolutely. That was what we mentioned before, that payment history. There are 5 in total that make up the credit score. Mm-hmm. That was 35% for payment history. 30% of your credit score is made up of how much you owe. It's a utilization of credit, meaning if you have $5,000 available to you and you only have $3,000 out on the credit card or credit cards, your utilization is 60%. Right, so it's the amount owed. And I'm sure there's something in that formula that based on the amount that you have available to you, if it's 10,000, 15, 25, whatever it is, I'm sure that has something to do with it.
Let me ask you, can people, if you have a credit card, can they call in and say, I want to lower my limit? Does that help anybody?
I don't know. I don't know how much it helps depending on what the utilization is.
Okay.
So I think that
I know people do that.
Yeah, I think that actually, I don't think there would be a reason for them to do that if they have a high credit limit, because now the utilization is lower. If they're going to lower the amount of credit that they have available to them, now the utilization may go up.
See, I think people have this mentality. I don't want them to see that I have all of this or available credit to me. If I lower that, then that makes me look better.
I think it's more how many cards or how much credit, how many types of credit do you have available? If somebody has 10 credit cards versus 5 credit cards,
right.
I think that's where that is going to fall.
Because I did that once before. I was afraid. I'm like, I got a $10,000 credit limit. That's scary. Could you imagine?
Let's go shopping.
No. So I called up. I'm like, can you lower that a little bit? What if the card gets in the wrong hands? What happens if somebody loses their card? And there's fraudulent charges on it.
We know identity theft is a tremendous problem right now.
It's huge. All right. And we have another caller.
Hi.
Hi, good morning.
Hi, thank you for calling.
I filed for bankruptcy 2 years ago, and I'm looking to purchase a home. I wanted to know do I qualify?
Hi, Amber. How are you?
Good. How are you?
Good. Bankruptcy is a little tricky, but there are definitely options available for somebody that has claimed bankruptcy. And it depends on which way you structure it and what type of product. So, for instance, conventional guidelines will prevent you from buying for several years, versus the FHA and HUD guidelines that allow you to finance after 2 years of it being discharged. Yeah, so it's pretty flexible for somebody that has bankruptcy. You also have, a situation on the credit where where it reports, bankruptcy reports on their public record. But it'll usually tell you if it's discharged or not and what the current situation is. So a lot of times...
That's a good question.
Yeah.
That's a good question.
Yeah, but you definitely have options available to purchase.
That's a great question. Thank you for
Absolutely.
calling,
Thank
Amber.
you.
Thank you.
Yeah, that's great. Yeah, I mean, in this market, with the recession that we've had, a lot of people, did have some struggling times, and things did affect their credit. So if you had to file bankruptcy, then...
There's actually a product that just came out under HUD guidelines, actually. Not a product, but a change to guidelines that allows people that have had, it's called the Back to Work program, that have had a bankruptcy, a short sale, a foreclosure, things. It allows them to buy after 1 year.
That's good to know.
There's
That's good to
nuances.
know.
They have to prove some things.
All right,
you
but
know,
it's good to know. So there is hope. So
absolutely,
there is hope.
there's a hope for a lot of people out there.
That's great. All right, Mike. So you've been listening to the Home and Mortgage Show. I'm Janine Panarelli. I'm broker owner of Panarelli Realty. And if you have any questions, you can reach me at 651-1776. That's my office number. And Mike?
And thank you for joining us. This is Michael Gianetto with Residential Home Funding. And you can find us on Facebook at the Home and Mortgage Show. And we look forward to speaking to you in the future. Thank you.